Hey guys, in this video, I'm gonna walk you through 5 of the best and highest yielding dividend ETFs that pay out on a monthly basis. Now, this is really important for any of you looking to get great, consistent, passive income that pays out on a monthly basis, as opposed to many other ETFs which pay on an either quarterly or annual basis. Remember to stick around to the end because I'll show you a really simple but accurate way to calculate exactly how much money you need to invest so that you can live off your monthly dividends. And I'll also walk you through a couple pros and cons of dividend ETF investing. All right, well, I know why you guys are here, so let's get into the list. The first fund on this list, coming in at number 5 for me, is the Invesco High Yield Equity Dividend Achievers ETF with the ticker PEY. And this index is comprised of about 50 stocks selected principally on the basis of dividend yield and consistent growth in dividends. And the dividend yield of this ETF over the previous 12 months has been 3.97%. And real quick, just to make sure that I cover this, so if you want to calculate how much you're going to receive on an annual and then a monthly basis, you're going to have to do a little bit of math. But the math is not scary, it's real simple, and I'll walk through it really quickly. So first you want to take the total amount of money you're investing, or the principal, and multiply that by the dividend yield. So if you invested $100,000 in this ETF, you would multiply that by 3.97% to come up with your annual dividend yield. But of course, this is paying on a monthly basis. So you're going to divide that number by 12, and that's roughly what you're going to be getting each month. And the 10-year growth of this fund has actually been really strong. It's been about 12.8% annually over the course of the previous 10 years. So this means $10,000 invested 10 years ago would be worth $34,658 today. And then we definitely don't want to forget about the expense ratio here, which is a very important number as we're looking at all of these funds. So their annual expense ratio here is 0.53%. So really anything around 0.5% or lower than that is pretty good on a high yield dividend ETF. Coming in at number 4 on the list is the Invesco KBW Premium Yield Equity REIT ETF with the ticker KBWY. So the strategy for this fund is based on the KBW NASDAQ Premium Yield Equity REIT Index. So REIT, of course, is Real Estate Investment Trust. The fund generally will invest at least 90% of its total assets in the securities of small and mid-cap equity REITs that have competitive dividend yields and are publicly traded in the US. The 12-month trailing dividend yield for this fund is 5.58%. And the 10-year performance or growth of the fund has been 5.56% annually, which would bring your initial $10,000 invested 10 years ago to be $17,267 today. And the total expense ratio here for this fund is pretty low at just 0.35%. Coming in at number 3 on the list is the Invesco CEF Income Composite ETF with the ticker PCEF. The strategy of this ETF is a fund of funds, which means it invests in assets in the common shares of funds included in the index rather than individual securities. And the index currently includes closed-end funds that invest in taxable investment-grade fixed income securities, taxable high-yield fixed income securities, and others that utilize an equity option writing or selling strategy. The 12-month yield here is really strong at 7.83%. The performance of the fund or growth over the past 10 years has been about 5.61%, which means if you had invested $10,000 10 years ago, that would be worth about $17,778 today. So because this is a fund of funds, the expense ratio is actually really high here at 1.97%. But remember, the dividend yield here is also very strong. Coming in at number 2, we have the MSCI Super Dividend Emerging Markets ETF with the ticker SDEM. As you can probably tell from the name of the fund, SDEM invests in emerging markets and seeks to hold the top 50 highest yielding stocks in emerging markets. Now with SDEM and the next ETF that I'm going to walk you through, both of these have yields that are in double digits. So really significant performance and yields here for these funds. So SDEM has been yielding 12.11% over the previous 12 months. And for the 10-year performance, we actually don't have with this because this fund was introduced in 2016. So since that time, the fund has actually shrank 1.29% per year. So this is definitely the weakest performing fund as far as appreciation in this list so far. But remember, when you're yielding 12%, is that really that important? And the total expense ratio for this fund is at 0.67%. Now for the top ETF on my list, coming in at number 1 is the Super Dividend ETF with the ticker SDIV. The fund strategy of SDIV is to invest in 100 of the highest dividend paying equities around the world. So not restricted to just emerging markets or anywhere, but just literally the best 100 dividend paying equities is what they're investing in. The 12-month trailing dividend yield here is 13.08%, so incredibly high. And the performance or growth of the fund, similar to our previous ETF, has actually been a little bit negative. So over the course of 10 years, it has averaged negative 0.59%. So not super negative, but also something that probably wouldn't count on appreciating at massive rates. But again, it's paying over 13% in dividends, so extremely strong on that front. And then the expense ratio here, again, isn't too bad at just 0.58%. All right, so that wraps up my top 5 monthly paying dividend ETFs. But I want to make sure I also cover and walk through exactly how you can calculate how much money you need to invest so that you can live off just the dividends. Now, it's a pretty simple formula, really easy to calculate. You can just do it with your phone in a couple of seconds. Really, the only challenging piece here, and this is going to be different for everybody, is you have to really have a clean understanding of what your monthly expenses are. So probably the best way to do this is just to take your credit card and bank statements over the past 2 or 3 months, average everything out, and then come to a nice clean monthly number. Remember, when you're doing this, you want to take out any money that you're saving for retirement or rainy day fund or whatever. We don't want that to be part of our calculation. So you just want to come to a nice clean number of what your monthly expenses are, and then we can use that to understand what you need to invest to have this be covered by all your dividends. You know, many of you have probably heard the term FIRE, financial independence, retire early. Now, and this may or may not be your FIRE number depending on your lifestyle and what your plans are for retirement, but this would be just the monthly expenses that you need to cover yourself so that you can be truly financially independent. If you lost your job or if anything happened, you would be fully able to cover your monthly expenses without any issue with passive income. All right, so the formula is really simple, so I'll flash it up on the screen here and I'll walk you through an example to show you how you can calculate this yourself. So what you're gonna wanna do is pick a dividend ETF and figure out what its annual dividend yield is. So we can use as an example here, one of the ones we walked through earlier. So I'll use KBWY, and KBWY's 12-month yield was 5.58%. So we're gonna start with that number. And then from that number, we want to make sure that we're factoring in inflation. So normally I would subtract anywhere from 2 to 3% to make sure that the principal, the amount that we have invested, won't be declining each year, losing value to inflation. But in this case, and as is the case with most of the funds on the list, is their performance generally outpaces average inflation. Of course, inflation this last year has been crazy. 9%, that's not normal. But generally over the long run, you can expect inflation to be anywhere from 2 to 3%. So if the fund is beating that target in its normal performance, this is not factoring in dividend yields or anything like that. This is strictly just the growth or appreciation of the fund. If that's averaging anywhere from 2 to 3%, then you're good to go. And I wouldn't really factor in anything on top of that for inflation. Then you want to take a look at the expense ratio and subtract that as well. So in this case for KBWY, the expense ratio is 0.35%. So we'll go ahead and subtract that. So after accounting for inflation, which in this case I'm not technically doing, so after subtracting that, we come up with a total of 5.45%. So that's generally after expenses, what you're going to be yielding each year in dividends. Then you want to take your total monthly expenses, whatever it is that you calculated, the bare minimum that you need to live off of, and then multiply that by 12 to get your annual number. So just as an example to walk you through the numbers, let's say that's $48,000 a year. So that's how much you need as a minimum to live off of. So we're gonna take that $48,000 and we're gonna divide it by that percentage that we just came up with, the 5.45%, $880,733. So this would be the amount you would need to invest in this fund so that you could return $48,000 per year. And of course, this would come out on a monthly basis. So this is that magic number. This is how much you need to invest in this fund at this rate to live off the dividends. All right, guys, I also mentioned I wanted to walk through some pros and cons of dividend ETF investing versus just investing in regular stocks or maybe high yield dividend stocks. So I think generally the advice holds the same for why you should invest in ETFs, traditional ETFs versus traditional stocks. And I think it's just a great way to diversify your portfolio and lower your risk profile without really impacting the return potential. So what that means is with an ETF, you're holding a basket of stocks, right? It may be 100, 200, 300, 400, 500, however you set up your portfolio. And this is being constantly rebalanced by the portfolio manager or the computer if it's a passively managed fund. Whereas with individual stocks, it takes a lot more effort on your part to continually rebalance your portfolio. You know, if you have one great stock, which is paying a dividend very consistently over a number of years, and then for whatever reason it goes bankrupt and loses a bunch of value and no longer pays a dividend, you'd obviously want to sell that and find another stock to replace it. And that would be done manually by you, whereas with an ETF, that would happen all automatically. And I think ETFs are also just a fantastic option for people who don't want to spend tens of hours or hundreds of hours each week studying the markets and making sure that they understand what's happening so that they can properly invest and know what they're investing in. So with ETFs, really that's all handled for you. And a lot of times it's done just mathematically if it's a passively managed index. So you don't need to stay on top of all the market news or anything like that. And I think one specific and probably the biggest pro for just dividend ETFs in general is that you're able to count on a consistent cash flow with your dividend yields. This is different from most ETFs or stocks, which may not pay a dividend, where you're just hoping the price of the asset appreciates. With a dividend ETF, you're able to count on that consistent cash flow month in and month out if you're investing in a monthly yielding ETF, which in my opinion is definitely the way to go if this is something you're trying to live off of. A big pro here, if you're able to invest enough, as you just saw, it takes a lot of money to be able to live off dividends. And remember, the dividend ETFs that I'm using here are definitely at the top end of the highest paying and highest yielding dividend ETFs. So it's going to be very tough to save up that amount of money so that you could live completely passively off of that income. All right, guys, I really hope you enjoyed the video. Spent a lot of time making this, wanted to make sure that I provided the most value as I could to you guys in picking these top 5 dividend ETFs. So if you guys could do me a huge favor, smash the like button, comment down below if you have any questions, and subscribe to my channel if you haven't already so you don't miss any more future content from me where I cover business, investing, real estate, and finance. All right, guys, thank you so much, and I'll see you in the next one.